Good afternoon, everyone. So today was payday. I'm going to be depositing the 250 into the account, which I already did a transfer from my joint account to my individual. Now I paid $750 the last paycheck. We have to go back and look. I am not positive now. Hold on. Let's go back and take a peek here. Transactions. And let us go back and see what we did. So we did do 750 the last paycheck. This one, let's do 250. I already transferred it over. You can see it here. I paid some bills out of here. So there was some bills that got paid out of this account. I'm currently looking for them. I just don't see them yet. Upgrade payment, here it is, $373. And also I did Easy Pass. It just went through here. It was just easier at the moment to do that. And that was it. So let's just go to our account view. This is going to be broken up. This video is going to be broken up into a different couple things. So number one, let's just look at the account. We're going to make our deposits. After that, I want to review a few things. So just, bear with me for a little bit, and we'll get to the new stuff. All right. So let's go into the individual brokerage. I have our sheet here. So I'm just going to keep going into the same 5. So let's just, and it's 50 into each of these. So I'm going to buy. And let's do $50 worth. And I'm going to do it on market, not on close. Market, preview, place order. Good. Let's go back to view our portfolio. Next, we're going to do YMAX. And let's calculate $50. We're going to do market, preview, place order. Next, we're going to do SPYG, buy. And it looks like SPYG is 107. So I'm just going to do one share. Market, preview, place order, AMZY. Buy. And if you're getting to know me, you'll know that I am a little all over the place currently. So, I'll try to organize everything the best I can. And as we go forward, I'll continue to work on that. All right, view portfolio. And PLTY, buy. And we're just going to buy one of these too, just because it's $64. Place order. And that should be all of them. Yep, that's all. So last week, for the put, I did a rollover to November 21st. This is like insurance, so the price, it's going to lose everything, unless the market really crashes, and then, it could help buffer this account. A couple days ago, I put in for SOXL. So on 10/21, I bought SOXL, and currently it's up 13%, but I'm going to go over the reason why I did that. So let's jump into that. So, I like to test different theories out. I watch creators, I watch people, and, I want to see if it works, right? Let's try it out. Let's see if this works. Excuse me, got my coffee. So a creator, Scott Welsh, awesome guy. He has an awesome YouTube channel. Go check it out. A while back, he had on a system that he was testing, and I tried it on this. So the system was that on a monthly chart, you put a 12 SMA, and if the price closes up above it twice, you buy. When price closes below the 12 SMA, you sell. Okay, nice, easy system, really simple. There's no stop loss, there's no take profits. We can do a whole bunch of stuff with that if we wanted. So I bought SOXL, it closed above here the first time, and here's the second. So then I bought a little late though, because you know, at the beginning of the month is when you really want to do it. So you're only checking this system once a month, which makes it easy. So I bought SOXL, and that is the reason why. Now, let me go in. Let me go to terminal. Let me go into a new web page here. Hold on. All right. So I have a few little things that I'm going to show you. So this is for the stock modeling. This is Python. So I modeled this. I modeled the SOXL tree, not that one, but I did it based on, let's see, I did TQQQ, and I back tested it just to see what it would look like, right? So a buy and hold from, what year did it want to do it from 2015 to 2024. And we can actually change that too. We can say 2025, and let's try through 1030, and let's see what we get. All right. Let's see here. No, it's not this one. We want this one. Okay, so through 1030, initial capital is $10,000. So the final portfolio value was 117,000. So the strategy returns 1,000%. Buy and hold though, 319,000. But doing that, if you wanted to do that, you'd have to suffer through this huge drawdown. How many of you would be able to go from $200,000, a little more than $200,000, all the way down to 50,000? I don't know that anyone would bear a 70, almost 75% drawdown. So the system helps with that. And here's some triggers for the systems. So, you know, here's a buy, here's a sell. So that might have been a loss. Here's a buy, here's the sell, here's a buy, here's a sell. So just to show you what it kind of looks like. So that's what I was doing. Now, just to give you a little background on that, if you want me to expand on that, just let me know. Put it in the comments. Now, let's talk about our strategy. Let's talk about the small account strategy. So as you know, I watched Paycheck the Portfolio. Excellent. Sean's wonderful. I follow him, and he just has a wonderful channel. I don't believe there's competition in YouTube. My beliefs are that, we're all on the same path, right? So I watch multiple channels. I'm sure you guys all watch multiple channels. We're not just watching one. I don't believe competition. I believe that it's all additive, right? So here's the Python code for it. So what I did was small account challenge. So this is the original, right? These are the original rules. $500, you can do $250, but let's say $500 per month bills from $2K to $20K. At $20K, you deposit $4,000 and you pay $3,500 in bills. All right. Now this didn't actually calculate correctly, because over here you'll see that it's $3,500. That should be $4,000. I correct that below. Aggressive strategy, and this is the one that I've been thinking about for a couple weeks now. I've been wondering, maybe we can we increase what we're paying in the bills throughout the time? Like, why do we have to only pay $500 in bills and wait all the way to $20,000 and then add in $3,500 worth of bills, or $3,000 more? Can we do that throughout all this time, and would it help? Right? So that's kind of what I model here. So add $250 per month. What I'm thinking, add $250 per month of bills for every $3,000 increase in your portfolio. We're still going to cap at 3.5K, right? And deposits will equal bills plus 500. the bill schedule. So at 2,000, it's 500. At 5,000 portfolio value, you're paying 750 in bills. At 8,000, you're paying $1,000 worth of bills. At 11,000, you're paying 1.25 and so forth. So you'll see the numbers here. Here's all, if you guys want copies of this, just post below. We can always throw this into, I can share the code. We can put this, however, we can figure that out. I can put it on GitHub. So here's the takeaways though. And let me go down to my corrections here, because this is the actual corrections. So small account, can't talk today. Small account challenge. Target is to cover $3,500 per month in expenses. You always have a deposit buffer of $500 per month above bills for portfolio growth. The dividend rate is 25%. Now this is where we get into those blended yields. So I actually created another Python code. So these are the 5 that I'm doing currently. So I have in here CLM, AMZY, PLTY, SPYG, and YMAX. And it takes their dividend yields and the weights and then the contributions for each. And it tells us what our blended yield is. It says 57.65%. When I model this, I'm only putting in 25% here. The margin rate, when you first come on into, when you're coming into E-Trade, they start you at 12.5%. I have not tried to get that down. I've seen some success stories where people are able to get it down, and others that say you need a larger account size. I'm going to wait a little while. I'm just going to pay the 12.5 or whatever the percentage is right now, and just see, I'm going to wait a little bit, let the margin build up, and then I'll call them up and see if I can get it reduced. So also I modeled a hybrid kind of solution as well, like between the aggressive and the conservative. All right, so let's go down. So conservative is $500 per month to 20K, then 3,500. You'll see that here. All these months, these are the months. And at the very end, so I modeled 10 years. At the end of 10 years, you'd have 412,000. You are getting dividends of 7,733. Your margin interest is 280. Net income is 74. Your margin rate is 20,000. Now you start paying off your margin because your dividends now exceed, and you can start paying down your margin like in this area here. Aggressive strategy, scale. Plus you want to scale your bills, 250 every $3,000. Deposits equals bills plus 500. So then here you can see that kind of modeled. At the end of 10 years, we're looking at 428,000 in portfolio value. Dividends are 8,000. Margin interest 189. And again, you start paying off the margin loan once you hit like the middle here, about 5 years. Hybrid is aggressive up to 15,000. Then you do conservatively. So let's get into the comparison summaries. So months to 20,000 under the conservative is 22 months. Under aggressive is 17. Under hybrid is 20. What's interesting is margin debt. Obviously, it's going to be higher under the aggressive because you're paying bills, right? Conservative, you just are paying the $500 a month bill. You're not increasing it until 20,000, right? But here you are being a lot more aggressive. That's why your margin maintenance is higher, 71% here, while 48.6% on the aggressive. Now, dividends, financial freedom. So dividends are greater than bills for the first time on the aggressive at month 60. For conservative, month 64. Hybrids, month 62. At 120 months, 10 years, here's our portfolio values. Obviously, you're going to have much more in the aggressive. This was everything. So just wanted to show that to you, just to give you an idea of where my thoughts are. My risk tolerance is higher. It's just who I am. So I'm going to pursue more of an aggressive. So that's what I'm going to start doing. I'm going to start following kind of through the aggressive. But there's a conservative, aggressive, there's a hybrid approach. If you guys have any ideas, you want me to model something out, send me, put in the comments, email me. It's scottfinance@gmail.com. And let's go back to E-Trade just to go through. So net account value right now is $2,667. Available for withdrawals, $328. Let's look at our margin. So actually, we'll look at our balances. So net account value is $2,662. Total market value of securities is $3,900. Marginal, so our purchasing power is $1,000. I used margin of $1,000 to buy the SOXL, just so you know. So that's in there. And so we have a margin balance right now of $1,303 currently. All right, let me go into two other things. So let me go to preview here. So I kind of modeled this. So you can think of margin as wallets, right? So you have your cash wallet. That's your paycheck. That's the cash you have. $500 per month. And eventually we're going to put our whole paycheck into our portfolio wallet. Now, what is the portfolio wallet? It has all your dividends. It has all your holdings, your stock holdings. Everything's in this portfolio wallet. Now, currently, I'm doing $500 a month into the portfolio wallet, right? But also, we got to add in $500 per month for the bill. So it's actually $1,000 per month I'm putting in to the portfolio wallet. And out of that, we're paying a bill right here. So I'm paying two bills: upgrade loan, $373, and a Wells Fargo credit card, $122. So I'm paying it to here, okay? Now, I wanted to also model something else. I'm still working on it, but I'll show it to you. So what is margin? Margin line of credit is like multiple secured credit cards. So here's your portfolio right here. That's the briefcase. So these are your margin line, right? This whole thing's your margin line. We're going to fix this up a little bit, make it look a little nicer. So if you think of these as a secured credit cards, each of these, so CLM, 30% maintenance. So what that means is you own maybe 1,000 of CLM. You can buy securities $700 using this secured credit card. Maybe another credit card has 50% maintenance. So out of that, maybe you can only use 500. And all these different holdings that you have, think of them as secured credit cards. So all these holdings you have all combine to form your margin line. So each acts like a secured credit card. So your portfolio is your collateral. It's like a deposit for secured cards. Each asset type, it's a card with its own borrowing percent limit, but think of it, it's all together. It's not separate, but if you think of it separately, then you can see that maybe one, CLM's 30%. 50% is AMZY. So each asset type, a card with its own borrowing percent limit. The broker tracks total equity across all cards. And if you drop below the minimum equity, it's an automatic margin call. And what you'll have to sell securities. If you don't add money or sell securities, they're going to make the decision for you and maybe sell everything. So key takeaways: a margin account isn't one big loan. It's a network of secured credit cards, credit lines, each tied to a different investment and their maintenance requirements. So that just gives kind of like hopefully that will explain things a little bit. And the other thing I want to show, so let us go into margin. Let's go up into our portfolio. And let's go into margin. So you can always check what a margin is on here. So AMZY, if you just click here, it'll show you. So 50%. Let's do CLM. So the margin percent is 30%. What about SOXL? SOXL, 75% for longs. So that's a higher maintenance requirement that I have to have cash on hand to cover SOXL. SPYG, let's see what that one is. 30%. YMAX, 50%. So that just gives you an idea, and you can model things out like a margin calculator here. If you wanted to sell and see how your margin or buy, you can see how your margin is affected by any changes. All right. Thank you for joining me for this episode. I hope that this explains some different things that I'm thinking about. Any comments, put them below, your thoughts, anything that you got, leave for me and we'll address them. If you have any ideas for testing different strategies, especially with the small account, throw them my way. We can always model it out. Let's see how it looks. And, because we don't have to follow exactly, we can change things up, right? And that's where I started thinking, for me, I'm going to follow that aggressive strategy because I have a higher risk tolerance. That's just who I am. Maybe you don't. Maybe you just want to be more conservative, and that's okay. Maybe you don't want to use margin. That's okay. All right. Thank you for joining me again, and I hope to see you on the next episode.